And my name is Thomas Barmann. I want to make you aware of the risk in trading in here, and also the word never loss trading doesn't mean you never lose a trade, definitely not. It came from the idea of never stop loss trading, and I'm going to talk about trade repairs today. And that's a key to success as well when you trade, because you know sometimes you are wrong. If you can reduce your losses, you're in the game. Yeah, and that's what I'm going to show you. But the key important things are trading is complex. If trading was easy, nobody would ever go to work. Just think of that. I want to decomplex it for you today and show you the key components to create trading and investing success. So first of all, let me start with a little definition. Yeah, definition for success. Yeah, when you achieve your personal financial goals in a specific period of time, or within a specific period of time, and within specified parameters. So how many trades can you access? What shall be the return per trade? What's your maximum risk you can take? And all of that we want to put into a shape and a form of trading today. Yeah, and to do so, let's compare a little. A fund manager, what does he do? Yeah, so if you give your money to a fund manager, they compare themselves to an index, and often it's like the S&P 500. And when we do that, the SPX opened in 2018 at 2684, and right now we are about 2820, so that's 136 points up, or plus 4.8%. So an average development would be you're 4.8% up in your portfolio. Okay, is it exciting? No. Is it bad? No, neither. Profitable success in trading is always good, but I think you're here, and I invite you to listen and take notes as well, to be here for understanding how you can make much more out of this trade environment. Yeah, and that's what we want to do, because we want to encourage you to trade and invest above and beyond the average expectation. And it is important to follow key principles and key successful actions to get there. Yeah, because between trading and investing, the key behavior and the action is the same. It's just a different time that you hold. Trading is usually specified for shorter term holds like day trading, swing trading, so you hold maximum for a couple of days, investing more for the longer term perspective. But in essence, the action that you take is the same, and it makes it much harder if you have less time. So therefore, I'll encourage you today also to start thinking about having multiple streams of income, not only focusing on a very short time frame where you have very little time to make a decision, but also focus on a system that's going to help you to specify when you trade, and focus on strategies that specify for you what type of a trade you're going to take on. Yeah, so the components and success formula that we're going to put together to here in that 45 minutes that we have, that say there are multiple components needed. It's up to you to make them work together or counteract to each other. And if you don't use them, you might feel the continuous pain of trading and investing, because there's many traders and investors, they put so much effort and time in and never come to success. Why? Because it's not easy. It's not easy. But we decomplex it today for you. And again, as said, I encourage you to have a pen and paper, take some notes, or come on board with us, because we're going to make you an offer to do so as well, to learn how all of that can be put in action. And we come from the one-on-one training education. We recognized very early, with 20 in a group, there's about only 20% that going to get it all, because you can't take care of everybody's individual need. So we teach one-on-one. We teach our systems one-on-one. We tailor make them to you to help you to establish the trading success you're striving for. Yeah. So here are the key things that we're going to cover today. Why to apply rules. Rule-based trading is important. How to find high probability trade setups and what does it mean? When is it high probability, when it's not? How to trade within multiple strategies and why? How to evaluate and compare opportunities, because you know you have Netflix and Tesla and Amazon and Apple. Which one are you going to take? Where are the odds in your favor? Yeah. And why to trade repair, and why trade repair is so important. I talk very little about hedging. Complex topic, but we decomplex that too in our teaching. And then I'm going to show you also a little bit the idea of why it's important to repair a trade when it goes wrong. Yeah, high probability trading means you trade with a high probability, but things go wrong. If you can repair the wrong ones, making less loss or no loss, then you are there. Yeah. So high probability trade setups, they exist. However, they have a condition. They are based on the underlying change of supply and demand, rather than on a mathematical correlation like a moving average and RSI and MACD. Those are all path-oriented, whatever correlations. They have a positive expectation. I'll tell you, they have a positive expectation. We calculate everything. Nothing in financial investments shouldn't be able to be established in a number. So all these have a positive expectations if you apply the rules right, with about 51 to 54%. But for a retail trader, that's very small margin to make money. So our rule says test by based on fixed entry exit stop, 20 trades, and if you do more than 30 in the right, you have a high probability trading system. How does it translate into action? A high probability trading system starts at or above 65% accuracy of having the ability to predict the future price move of an asset with clearly defined entries. When do I buy or sell? Exits, where do I get a positive exit? And stops, where do I place my stop or repair my trade? Yeah, never stop loss trading. Where do I repair my trade? And this is important for you to trade comfortably, because you know this way you can, for example, if you're going to go long with an asset, you can work with a buy stop order. Only if a certain price level is reached, you're going to buy the asset and you bring it to a target. When it comes to a stop, you either take the stop or you repair your trade, and we'll go through that. Yeah. And take a couple of examples of how it looks on the chart. First example I put in here together, Apple. Just in the last couple of days, and then we go a little back and forth, showing you that these things are repetitive, and we found a way to portray them on the chart. You will see red color for things that go down, blue color for things that go up, and rules. Look, we don't trade over what? We don't trade over earnings announcements, because you know it's crazy. Things can move, shift 10% up and down. We are risk adverse. Yeah. So now let's go in it. Yeah. And look together here of what is achievable with the chart. So you see here, that's what's called a never lost trading top line signal. Yeah. It occurred here on 7/12, and it said go long in this asset, but get out before the market gets into the environment where it has earnings. And the computer helped us to specify a 10 candle target. Yeah, so after 10 candles, the price of Apple was supposed to be at that second dot, and bang, it got there, and we got out of that, preventing all these havoc here within a down move and an up move. That's what the institutions like to do, and we stay out of it, but we trade consecutively by our signals. So here, buy stop order, next candle, ticked it out, we are in a trade, and now you have the choice, and we work with you on that, to either buy the stock or to work with an option. Yeah, because you know, then you can work with a fraction, but everything will be what we do with you, risk-based. What's the maximum risk you can take according to your account and per trade? Because you know, as traders, we control what? Not the outcome, we control the risk. We make a prediction for the outcome, but the risk is what we control. So when you now see, okay, worked out, then you see all these signals here, we disregard them, because over earnings, it doesn't matter to us. But here you see whether we came into earnings as well. I took chart from the beginning of the year, it's Apple daily chart, and you see here, sell, boom, win. Sell again, win. What's with the second sell? No, there was no. Yeah, so it's here, it came to target, came to target, came to target. And that's high probability trade setups. Here you see 8 winners and 1 loser. Yeah, where you follow clear-cut systems, where you can operate with a buy stop, sell stop order, very easy from the comfort of your home, and you don't have to control the trade all the time. And we find strategy that suits your need. If the stock is too expensive for you, then we'll find an operation with an option where you can trade for a fractional 1 to 2% of the price of the asset and still participate in directional moves, but also we operate within selling puts and calls or combinations with verticals, participating in moves depending of where the direction is. Here we had a lot of directional drift, and you see here this Red lines signify your trailing stop if you'd like to stay longer in the trade, or here on the way up. And you see gray signals and red signals. Red signals are top line, orange signals are top line too. The others are trend catching. And I want to make you today an exciting offer of having like a 2-to-1 deal, never loss trading top line light and never loss trading trend catching together in one package, giving you a higher participation rate, so more trades to make, more income opportunities to take. And so you see here on the way up again, trailing stop with the red line. So the chart shall tell when to buy or sell. This is how we operate in the market, and we teach you one-on-one how to put those rules in action, and we help you also to have a clear-cut guideline where they're all written down for you, and we have documentation, and we record every individual session to get you into it. Look, all of us who try to learn golf, it's very hard to be done from watching a DVD. Can be helpful, but you know, you'll have to learn the swing somewhere on it. And we work with all the individuals that come to us to get the swing of trading into their day-to-day routine, having a plan that works for them and the available time. If you work, for example, if you don't work, if you have time early morning, we'll always suit something together for you that you can operate it. And I bring day trading examples too. These are just swing trading examples, and we are portraying out, as you see, 10 days is the most we predict out, or 10 bars. If we trade with weekly charts, then we predict out 10 weeks, or with some of the signals, we predict out 3 to 4 bars. And I'll go into action with you, showing you how high probability works on a chart. And I take now the ES. Just the other day, took the example here, say, okay, ES here had my signal. This gray signal is 3 to 4 bars, so there is a clear-cut exit rule. Yeah, so yeah, but it goes higher, absolutely. You can stay in the trade, but for example, we tell you, if you bought one contract here, then get out and get into a new contract and then turn it out, and you can do that. Or if you have 2 contracts, so you bring the first contract to target and you trail the next. And we also teach you when to get out. For example, this is what we call a light tower, has a little cyan dot in the middle, and there is one thing that says light tower on a high, not a good place to buy. And that's an easy, simple rule. But when you see bottom light towers we like to have, light towers on a high, not the best place to buy. That's a daily chart. If that's not for you to trade one contract for so many days, because it requires a certain margin that you have, we can teach you how to do that with SPY options for a fraction, where you can operate basically with $100 risk increments, suiting your individual trading plan until you feel comfortable, you can do this, and then you scale up. Yeah. So here's, you see now a 1 hour chart made yesterday. Yeah. So yesterday, the entire day on a chart. So we came into, yeah, so we said, what's with the buy signal? Look, didn't get confirmed. We operate with buy stops, sell stops. Yeah. So the entry was 28.15, never got there. And we add 1 tick to it. Yeah. 28.15, 25. Bang, never got there. This one, yeah, next candle got there. So you're in a short environment and you have your target. Money made. Yeah, solid here, 5 points. Not bad, $250 I used to take. You do that again, that chart went ahead of me. Yeah, so let me go back. 1 click too many. Yeah, so you do it again. And you do it again. 1,500 come your way, and you do it again. That was a big one, because now market environment came into the opening, and there was your target. So things are possible. These are not made up charts. They are real. This is what happens. And so as said, depending on what you are, a day trader, swing trader, our charts work at 5 minutes and 2 minutes and 1 minute, but we encourage you not to trade these time frames. It's the middle of volatility. If you're not trading for a minimum on a futures trade, then you will never, ever make money. It's nice for entertainment, but it's very hard to make money on it. So we show you time frames that work. We show you assets that work. We show you strategies that suit your risk tolerance. And then we can go working together on putting together a plan for making you the trader that you want to be. Yeah. And key will be for everything, reward and risk management. Yeah. Risk definition, if I give it to you, is entry to target, entry to stop, or we repair trades, but we'll come at the end to that. All of the charts have a dashboard on top. It says key expectation, a move of a certain amount of dollar. That's a certain percentage return on cash. Then you see how many up or down trends we have, the target, the stop, and if the trade is favorable or not. And we'll talk about risk here. So favorable here means you make more money than you risk. That's always positive, but the computer is telling you that on a top dashboard here. So that's always up there. And on the last candle here that was measured when I took that photo yesterday, yeah, so then it was risky. So it's 0.7. What does it mean? So for a dollar risk, you get 70 cents reward. Not good. Yeah, because I tell you one thing: never, ever, ever, please take more than $1.20 risk for $1 reward. You might say to me, "Well, come on, I always trade $2 reward for $1 risk." I'll teach you a little down the road that might not be very smart. Yeah, but I'll help you to get all that together and put it on the chart for you. So how do things continue? So you see the same chart here. Oh yeah, even that second target got hit in the duration of yesterday. And then again, light tower on a high, not a great place to buy. So, wow, what's with this? Is that acknowledged too? Yeah, but you know, then you bring that thing all the way through into the next day. And when we day trade, we close our trades at the end of the day and we stick to our rules. Light tower on a high, not the best place to buy, then things are over. Yeah, and now the key is, you see already we have futures, we have options we talk about, we get stocks. And so with that, we like to trade also with multiple strategies, depending on what's on the chart and what the situation allows us to. Yeah, so let's go into it. Yeah, what does it mean, multiple strategies? It's two ways. First of all, we want to have multiple streams of income, because just relying on one thing can be very dangerous for you. However, having multiple things going for you, we want to help you also to find how to put them in action. So therefore, not only one time frame, and harvest on multiple time frames and make multiple returns. So when, for example, if you want to trade crude oil on the longer term and the risk in the future is not for you, we show you how to trade that potentially with a derivative in an ETF, or show you how to trade that with $35 of risk increments in options. Yeah, then we'll work together, having maybe potential stock trading strategies. Yeah, simple, long or short. If you trade out of an IRA, we'll need to find different solution. Then we go into option trading, but we also do option selling for those of you who have a margin account. And you see already different possibilities, different strategies. All together, they help you for putting everything in action. And we are doing trading education since 2008. And this far, we haven't had a complaint. Yeah. And so option buying is also very important. When is an option fairly priced? How does it go? It's from our dashboard. You read that in our SPOO. You know in relation to the speed unit what you're going to pay for the option and which expiration day you buy and which delta you buy. All of that is taught. And the same for futures. Which futures, how do you follow, which are best time frames for all those individual futures, because you can't just cut everything into the same slice. And trade repair, essential, and you will see what it can do to your trading, because I have a little calculation scheme that I put together for that. I always set up a new presentation here, because I want to give you new input, and so did all the other presenters too. And I hope you take the value out of this and decide at the end of the day which one is going to fit you, suit you, and moves you to the next level. But trust me, you'll need somewhere, and whomever you choose, a coach and somebody who takes you by the hand and guides you through that. So therefore, you need a coaching program and a training program, documentation and repetition. Yeah. From that, we want to go from a strategy to a plan. And how do we do that? So I put together here where you see that's just a recent example of somebody who came working with us. And so you see in that example here, we have multiple streams of income here. So we do some day trading in futures. Yeah. And we do so 2 trades, which we assume for the person who's working as well. She's working 4 hours. Futures trades, we had some 2, daily chart with options, with stocks, and weekly chart. So this always looks different to every person that comes to us, and we work that into a return scheme. And you see here at the bottom of the return, you have a 15% return per month. That's what we strive for. Yeah, putting it all together, and with also supported by an action plan and calculating it out. And you see our assumed probability for new trader was 65%. That's what we say, high probability, 65% and up, to predict the situation based on the indicators that you get and based on the program that you work with into action. So if you are now trading with a system that is moving average based and has a lower probability, so I put here 53%, because we say those are usually ranging between 51 and 54. So we took the middle. And so then you see, oh, 4.4% return if everything works right. Yeah. And that's also not bad if you make that per month, but it's a considerable difference to what I showed you here. And can I guarantee you that? No. But I will work with you to get all the kinks out, to move you in a direction of striving for meaningful returns. And at the beginning, you're not going to be 100% invested. You first need to get it right, but that's the goal and the end in mind where we want to get you. And everybody's plan is a little different. There is no risk-free trade. Everything is risk-based. So you saw here the risk was average 1,000, maximum 1,500. We evaluate every situation and guide every individual new trader or trader. We have many experienced people also in the direction. For an experienced person, it is a lot of unteaching to get taught. Unexperienced person usually moves faster into the right direction, but we are used through years of managing and working with people for getting people to the best performance. Yeah. So, and to do so, we have multiple trade strategies that will work. Yeah. So here, for example, a put call strategy. So that's a real trade that happened. We'll calculate the entire thing through. Yeah. So you see here, this associated margin for this naked put selling was $13,000. The assumed return, the assumed risk, and you see, oh, yeah, that's a given. I'll show you statistically. Look, there's no risk-free trade. It's usually one-on-one. But the cool thing is you have a return on risk of 105%, and the odds ratio is in your favor, and your return on margin was 13.5% in a matter of a couple of days. So that's rock solid. Yeah, all can be done. Always the strategy that we choose depends on the situation that's on the chart. Sometimes put selling or call selling is favorable. Sometimes put buying or call buying is favorable. Other times we'll put some more into the asset in itself. So we'll find a way for you to make multiple trades and have a high participation rate and have your money invested within a controlled risk. Yeah, so that's what we want to express. And you see here we got systems in place that help you making that determination of what you want to do and how you want to put it in action. Yeah, and you see here the premium, there's the input fields, they all go in here, and then you get a calculation. And I tell you what, here we want to have a 70% return on risk, else we don't do the trade. Yeah, because we are cautious of what we do. And now with the risk, we come to a risk and reward appraisal and want to show some statistics with you. We made statistics where we related the reward to risk. Yeah, and you see here the trade setups that you can find, they occur, but they occur rarely, that I'm having a 2 times higher reward than risk is only 5%. However, you have a big percentage here, 35%, that have a bigger risk than 1.2 to $1 return. Those you want to prevent. And your system somehow has to give you an idea which situation is up there. How do you appraise the situation based on your system? And you see in average, give or take, you trade about 1 to 1. That's what you can expect. Or you put a little more in when the situation is there. And the chart needs to tell what you're going to do. Yeah, because this structure here, the same thing in blue bars, has a risk if you trade only for the high, or if you expect always a 2 to 1, you'll get stopped all the time or higher. Yeah, you'll be out all the time, and after 10 bad trades, you're no more the same person. Yeah, because 35% of the trades also you need to that occur, they have a setup out based on the underlying structure, but they in risk reward they're bad. On our chart it says up there risky, don't take the trade. Yeah, and so with that, expect about $1 for $1, then you're a wise trader. And when you do that, you need a systematic to put that in action. And that chart, the system that you operate with, has to tell you. So let's make a stock example first. I pick Google. Yeah, so when you see here the chart for Google from the left to the right, you see, wow, I got a lot of this, but that's not what we're talking about. The orange are the ones where we expect a wider move. Yeah, and you see it occurred. Yeah, the wider move occurred on the orange chart. However, there's so many other signals. We don't want you to wait all the time. We want you to take those signals to the long side that they're up there, and the assets to the short side. And you might say, yeah, but by so many assets, it's all there. Not all assets are easily tradable, and so therefore we help you to pick out those. But you see the orange points, they'll help you to make a difference on the chart, because here this one was confirmed and the others, but you had 15 other trading opportunities in the time frame you are looking up, while only 2 of those orange were confirmed. You said, but this was beautiful. Yeah, but we didn't know, but you could have taken this one to bring it home to target. There was the target, there was home. Yeah, and this is a key we want to tell you. You'll need to have opportunities all over to participate in assets that are easy tradable, allow you to trade multiple strategies in the up and the downside direction, and will help you doing that. And here you see on Google, on the chart here, it is a more recent chart, yeah, forward. These signals continue, carry you out, and here you had only one signal that wasn't even confirmed, giving you a bigger than 2-to-1 target. Yeah, it went up there, but this one, by our definition, was not confirmed, but later on here, bang, we had the trade that got us home and got us where we wanted to be, yeah? And so very recently on Google, yeah, so just the other days, so again, we don't trade over earnings because, you know, we have a high probability system, but you saw here, there was a selling opportunity, but also with that line, we knew it's not going to be forever. If we take it, we'll do it as follows, and we get out when that line is hit, because then you saw a reversal is happening. But see here how many other opportunities we had within getting into expiration and getting out of expiration, and the chart is telling it all, and it evaluates every situation here at the last bar. 2-to-1, so for $1 of risk, you get $2 of reward. There's the target, the stop, and there's the appraisal. This is a $28 spool. If you buy the assets straight with cash, it's 2.3% return, and with margin, you can just add to it whatever margin your broker allows you. Usually it's double in a very short period of time, because we portray out maximum to 10 bars, and here that's a daily chart. Yeah, money management. Next component I want to stress with you here. Yeah, on the money management, what do we mean by that? Yeah, we have here on a money management side, we want to prevent drawdowns. Yeah, so not too much risk that you get exposed to. Odds based. Yeah, every situation has to be evaluated to bring your money to the best return on investment. Favorable, we leverage. Acceptable, we put a normal amount of risk in. Risky, we stay out. Yeah, and trade with multiple strategies, because, you know, sometimes by a strategy change you can tame the chart and what's on there, and we spell out those money management rules together with you in a plan. Yeah, and so an odds-based investment then appraises the situation. So we have here an Apple situation that we appraised, and you saw here on the stock side, we said, okay, in the portfolio holding, it makes sense here to buy 200 shares, and you have about $723 risk on a $751 expected return. Yeah, not bad. And if you trade the option, so here we would do the option trade then with 2 contracts, and we always evaluate the odds. These are systems every trader should have on hand. We'll teach them, we'll give them to everybody who signs up with us to be in a position to evaluate what we are doing and why. Yeah, and when we want to repair and hedge, and why is that important? Yeah, on the hedge I go a little shorter today because based on time, hedge we usually do with futures. If some overnight happening is coming into place, automatically your portfolio would be hedged. So imagine you have an IRA, you need to be able to do something if we are sliding or if something is happening in respect to your portfolio, like we had it in 2008. And so we had a couple of interesting moves and we want to be ready for those. And the other systematic is repair, not exiting, yeah, never stop loss trading. We repair the trade. And why does it make so much sense to have that? First of all, you understand how to have your portfolio not sliding down 50%, because then you make 100% to bring it back to break even, and that's not easy for many. Yeah. However, here we want to go and work together and say, okay, in a 100 trade example, yeah, if you do dollar for dollar trade, risk to reward, yeah, and if we do that and we win 65% and lose 35%, so the balance of the trade is $30, yeah. So within protection, we'll make 60% less, or we lose only 40%. How does it come out? So I gave it here quick and say, okay, it's a 70% leverage trade repair gives you, but let's calculate it together. So you take 100 trades, $65 gain, 1 for 1, $35 loss. The balance is $30. So I now do the same, $65 gain stays the same. I repair, make only 40% loss, that's $14. That means I make $51, and that's a 70% higher return. So therefore, if you have those methods on hand, you'll see what happens. You leverage your return side by reducing your losses. Yeah, because in an environment where you have to count on basically one-on-one risk to reward, that's an essential tool to have on hand. Yeah, and all of this will help you and work with you to put into guidelines. Yeah, having guidelines to follow rules, clear analytics, measures, systematics, strategies, decisions, and we put that together with you into a written plan. Got your name on it, but that's not important. It tells you when do you trade, how do you act, having a financial plan, as I showed you before, and having an action plan where you say, these are my agreements, these are the assets I focus on, these are the time frames I take into consideration, and we work together one-on-one for putting that all in action with you. Yeah, so that's our commitment that we make. And somehow, if you don't feel that's appropriate for you, think about having it for you, because, you know, as Renee said, I'd really want to make the trading world for the private investor a better place, helping you to participate with the right tools on hand, with the right skills, the right knowledge, and the right systematics. Next thing, participation rate. So how do you find your trades? Yeah, we'll do and have opportunity finders for you. Never lost trading alerts for multiple stocks, futures, forex, optionable stocks. And we have own watchlist scanners, which also come with some of our programs. We have watchlist indicators where you look at a certain set of assets and say, okay, this one is ready on the time frame that I prepare. And we'll do that repetitive, helping you to stay invested time over time and be ready when a trade occurs. So here's just a quick example I just took from the other day. Yeah, the Never Lost Trading stock alert for July 31. Why that? Because I wanted you to show something actual. Yes, it's really happened just a couple of days ago. So we kicked out two opportunities, long and a short. Yes, Citibank and eBay. Citibank was a long, eBay was a short. eBay we closed out today. Yeah, so I'll show you the details. Yeah, and so here you see the Citibank chart. Yeah, so we had a gray signals. Gray signals are 3 to 4 bars. Target was defined, and you see here, oh, risk reward on that one is sexy, isn't it? Yeah, so yeah, it has something. And you saw also when the computer calculated, it did it. Oops, it did it that day. Yeah, when the computer calculated, there was the target. Others had it too. So the thing is institutions know when it's time to get out. And you saw here when the price, this candle was one hollow candle all the way to the upside until all the sell orders came in, but you knew it in advance and you were able to leave the trade before then it banked down into here. Yeah, sure, there was a dividend and all of that in it, but you know, games are played. maximum expectation of the thing, and there was your red line there. This was the trade to take. No explanation needed. It was a simple trade, 1, 2, 3 days in it, and you made about a 2% return on the asset if you bought the stock, and you made about a 60% return if you bought the right option of Citibank. Yeah, so now we go into eBay. Yeah, this one we closed out before we traded here because it was time for it, because you can't be on 2 places. Yeah, so you can't trade when you have to close it out. So different story here. Look, eBay plunged, boom. Yeah, all the way down here. What's happening then? If you are an option buyer, then options are expensive, yeah, because the Vega volatility index kicks the option overboard. Trouble is in, but here we did an option selling. We sold the 33.5 strike price, yeah. Yeah, so we did a call selling, yeah, we went short 33.5, and how much did we obtain? We got a premium of 58 cents. The margin per share was $5.80. We do better if you have portfolio margin, but I just wanted to do a high example. The risk per share was about 60 cents. The return expected was 10% in a matter of 3 to 4 days, and the time in the trade was maximum 4 days. So that's a nice example. So we left, because we can't be on 2 places, the trade today, we gave 5 cents back to the market. Yeah, so we made 53 cents per share that you engaged. So, you know, one contract is 100 shares or however many you want to do, and bang, the trade is closed. Closed, set and done. I don't know even where it stands right now. I can quickly go back in here. Yeah, so eBay is at 33.56. Yeah, okay. That would be a little, but we are out of it. Yeah, so you learn also strategies. When should you leave a trade? Yeah, you give a little something up, but instead of making a 10% return, you made a 9% return on your margin in a matter of 4 days. That's not so bad. We do it a couple of times in 220 trading days, you're on. But the key was here, different strategy, because different setup. Just put buying wasn't making the deal for us. Yeah. And so with that, we really want to encourage you to rely on multiple assets, multiple time frames, multiple strategies, and adjust to market environment. Yeah, sometimes put selling, sometimes call selling, sometimes the asset, and all of that we show you one-on-one. That's our key thing for us, because we understand everybody is different in their risk tolerance, in their preference of what they want to trade, and this is why we do one-on-one training with you, work with you, and get you jointly to turn yourself into the trader that you want to be. And how do we do that? Yeah, we'll do that. We do that in giving you server installed software. Our software is based on Thinkorswim from TD Ameritrade, so then you have free data access to real-time data. We always have clear-cut entries, exits, and stops. We have position sizing models, as you saw them. We show you the time in a trade, and we show you how to do the risk handling, and put together with you a business plan for trading success. All of that helps you to go away from charts that look like this, that are past oriented, that are statistical oriented, have low probability, moving you like what I showed you here into an environment where you have a high win rate, and when things go wrong, you learn how to repair your trades. That's a holistic approach which I'm showing you here. Getting you and helping you to carry you where you want to be, with a joint work and with a system in the background that helps you to make meaningful decisions at key points where prices start to move, and apply the strategy that's most at Propel. Yeah, so we have also a basic system. Yeah, so what I showed you here before is a combination, and as said, those of you who are interested, write me an email or call us at the office. Yeah, contact at Never Lost Trading, the office. I give you the number in a second, and we're gonna work with you, bringing you over and moving you in a direction where you can trade with that. For more beginning traders and lower budget oriented entries, we have a trade color scheme, we call it, where you trade at a certain, by an algorithm, when certain combinations of colors are set into place, and we'll do that also for all the different asset classes. And you see here what we have it for stocks, we have for options. All of that you can get access to, and I'm not going to show you a price here right now, but I offer you, if you like what you saw, if you're willing to make the investment, if you want to work with us, then I'll give you another consulting hour where you can jointly look at the assets that you really want to trade. Because, you know, we had clients that only wanted to trade random length lumber. Different reason, mill in Canada, they wanted to have a hedging strategy to deliver Home Depot on the long run, protecting themselves to the downside, leveraging to the upside. Okay, fine, we'll work with those people. We have others that are oriented towards cattle or grains. That's usually not for the average trader. Why? There's lock limits, there's specialties and special knowledge. We usually don't encourage a beginning futures trader to trade those assets because they imply a lot of special knowledge and a certain risk, which we usually don't want to get you in. But with that said, so if you're a futures trader, we'll look not at only trading the ES, we'll give you other opportunities. There might be some futures where you also feel comfortable to take longer term trades because the margin engaged for some of them is very little and doesn't exhaust your account quickly. Because, you know, the margin is a measure for the worst overnight happening that can be there. The CME determines it, and so with times with less volatility, margins are lower. With times of higher volatility in assets, they go tremendously higher. If you're ready to work with us, if you're ready for a special introduction that I only offer to the ones from here, so please mention that you came from this webinar, then call us at 866-455-4520, and we work together, putting together potential 2-in-1 program of Never Lost Trading Top Line Light and Trend Catching, or the starter program in Trade Colors. And all of those come with a certain amount of specifically dedicated hours. It's only you. They're all recorded. We work jointly through all the strategies that are most applicable for you and through the strategies that suit you based on the maximum risk we want to be tolerating in any trade. Because as a trader has said, we control the risk, we make a prediction for the future, but we'll have the assets on hand. If a thing goes wrong, then basically we also want to repair the trade. Or if you're fully invested like in an IRA, have something in place that you have a hedge and that you know how with the hedge you can have a good night's sleep in case of an overnight happening. I hope I was able to encourage you to see trading holistic from multiple strategies, multiple angles, multiple dimensions of clear-cut, high probability trade setups. And with that said, I thank you very much, and I thank the organizers here for having the opportunity talking to you. You have the opportunity here, either call the office 866-455-4520 or contact at neverlosttrading.com to schedule your specific hour where you can call the assets, and we count up the trades, good ones, bad ones, and you'll see that 65% and up is probable, and it is not just for a presentation, it's real.